All right, let's talk about SoFi Technologies. This stock has been on an absolute roller coaster lately, and right now it is caught in this incredible technical tug of war, with some really powerful forces pulling it in opposite directions. So let's grab the rope and see which side might have the upper hand. So the big question on everyone's mind is pretty simple. Is this recent, pretty painful drop in SoFi's stock just a healthy breather and a longer uptrend? Or is it something more, a serious warning sign that there's more trouble coming down the pike? That's what we're going to unpack right now. You see, SoFi stock is sitting at a really critical inflection point. I mean, you can almost picture the bulls on one side and the bears on the other, just staring each other down. It's created this crossroads where the next move is going to be fiercely debated. And to get why this moment is so important, we gotta dive into the numbers. So here's a quick snapshot for you. The last price was sitting at $25.19. Now, that's a good chunk down from its 52-week high of over $32, but it's also a massive climb from its low of under $9. This huge range, that's our first clue right there, that this stock has been in an all-out war all year long. So let's start with Team Bull. What's their argument? What's the strong foundation that has them so confident? Well, it all comes down to the long-term picture. Everything revolves around this one number, $25.19. This is our baseline, the price right in the middle of this whole fight. Now here is the most important number for anyone with a long-term bullish view, $19.46. This is the 200-day moving average. Think of it like a long-term health report for the stock's trend. It's a big one that a lot of people watch. And look at that gap. The current price is almost 30% above that key long-term average. In the world of technicals, that is a classic textbook sign that, hey, despite all the recent drama, the main long-term uptrend is still alive and well. This right here is the bedrock of the entire bull case. But hang on, that's only half the story. The long-term view looks pretty solid, sure, but the short-term picture, well, it tells a completely different story. Let's flip over to the other side of the coin and see how the bears have launched their attack. We're still at that same price, $25.19, but watch what happens when we zoom in from that long-term view to what's been happening, right now. And here's the problem for the bulls. You can see it clear as day. The current price is way below both its 20-day and 50-day moving averages. Since these averages show us what's been happening more recently, being this far below them is a huge red flag for short-term weakness. So what that really means is this. When a stock can't even hold above these shorter-term lines, it's a strong signal that the sellers have grabbed the steering wheel, at least for now. In this immediate fight, the bears are definitely winning. Okay, so long-term is strong, short-term is weak. Simple, right? Well, not exactly, because this is where the story gets a really fascinating plot twist. We have to look a little deeper at the kind of selling pressure we're seeing. Before we jump into the data, let's get on the same page with a key term, oversold. Now, this doesn't just mean the price went down. It means it went down so far, so fast, that the sellers might just be getting tired. Think of it like a rubber band that's been stretched to its absolute limit. It might be ready to snap back. And this right here is the heart of the whole conflict. On the left, you've got indicators basically screaming that the price has been falling hard and fast. But then, on the right, you've got these other oversold indicators. These are kind of like the fuel gauge for the sellers, and right now, they're both flashing empty. The selling has been absolutely brutal, but it might just be running out of steam. And all of this points to what's called a waterfall decline. That's really different from a slow, painful, grinding downtrend. A waterfall is this sudden, shocking drop that often burns itself out just as quickly. A grinding decline, on the other hand, well, that suggests a much deeper, more persistent problem. So, after all that, where does it leave us? Let's put all these conflicting pieces together and see if we can come to a final verdict on what's happening right now. It really all boils down to this incredibly tense standoff. You've got the bull case, they're holding on to that strong long-term foundation. Then you have the bear case, they totally control the short-term battlefield. And then there's the wild card. The selling was so intense, so fast, that it might have just exhausted itself, creating this deeply oversold situation. And that really just leaves us with the ultimate question, doesn't it? The bulls have the foundation, the bears won the recent battle, but they seem completely gassed. This is the very definition of a technical inflection point. The data here isn't telling us who's going to win, but it's framing the fight perfectly. What happens next? Well, that's what the entire market is waiting to find out.